Both our stock indexes down for the day. Gold also down. Bonds up on the shortened trading day on Friday after the Thanksgiving holiday in the United States. Let's jump into these markets. We always jump in first to the S&P 500. Like we said, down for the day, 0.67% on Friday. That added to the total down mood in the market over the course of this week after two prior weeks of really a sideways slide. The week ending the 9th of November was an up week, but if you look at the candle, the Heikin Ashi candlestick, it really just sort of retracted a bit of the losses from the prior week. Then a doji over the prior week, that's the 16th. That really was a doji tending down because we had a red doji. Whenever you see dojis means lots and lots of indecision. And again, what happened over the course of this prior week, a red down candle with a nice wick about the width of, or about the size of the down candle. And we see that the derivative oscillator continues to lose energy, but that price percent oscillator, our main indicator, heading down quite sharply. And don't forget, we're still in confirmed down move since all the way back on the 12th of October. So if you jumped in around that time, you have been doing quite well. We had a couple of different jumping in points for you. So let's look a little deeper. We go to the 2-day chart. What do we see? Well, of course, we've now gone into our 10th day of strong down movement. Market peaked after the last run-up back on the 8th of November, and then, of course, bounded away quite nicely on the 16th, right around that time period, really started moving over. It really laminated itself starting on the 8th, and then bounded down and up, and then this last time really moving down nicely for 8 strong days of down movement, price movement well below the 2-day and well below the weekly. Derivative oscillator flipped over to the negative, which is nice. Took it a while to do that. The price percent oscillator still heading down strongly. We look at our 4-hour chart. What do we see there? Strong down movement in the morning on Friday, and of course, was only an hour's worth of trading in the afternoon, that down also. Price percent oscillator heading down, derivative oscillator sort of sliding sideways. Things are looking nice and just continued strong down movements. Of course, when did we have that latest crossover on the 4-hour chart? Jumping in point was somewhere, and again, Heikin Ashi candlesticks aren't the best for determining that. Those of you who don't know what a Heikin Ashi candlestick, about 100,000 people have taken our training on it. Please go check that out. You can find a link in the show notes. You just go to chartingwealth.com, either our website or our YouTube channel. You can find that training. I'll put it at the end of the video. Those listening on audio, go to the website. But the jumping in point somewhere around 274. And of course, the lowest has been, oh gosh, on Friday afternoon, 263.66 or 24, so 263. 274 to 263, that's $11. That's quite nice for a practice trade. And again, it's a beautiful time of year, fall-winter trading zone, and we've got beautiful charts setting up for us, and we're just trend following. It can be that simple, but again, you know, even though all you got to do in the markets is determine whether or not your equity's going up or down, seems simple. Those of you who have tried and practiced over the years, you know that it is not always that simple. Now, let's go to the Qs. What do we see there? Well, down 0.72% for the day. Big down week, a big down candle on that weekly chart. Price percent oscillator racking over, going down. Derivative oscillator gaining downward momentum. That's nice to see. We go to the 2-day chart. What do we see there? Again, 12 days of strong down movement. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. And we go to that 4-hour chart. What do we see there? Again, we're continuing to sort of watch to see if we've hit some kind of bottom around the 159.50, something like that. Keep your eye on things as the markets bounced around there. Now, price percent oscillator still heading down, derivative oscillator losing downward momentum, but keep your eye on things. It is really, again, should be of some concern that we've been there for 1, 2, 3 days now. So just watch the beginning of the week. You don't want to lose what you've picked up. Jumping in point again somewhere around the opening at 170, all the way down to something like, well, at the end, the low for Friday, 159. So again, about $10 or so over a few days. And this is, of course, unlike the S&P 500 that is around in the 260s. Again, we're in the 250s. So quite nice to see that much movement percentage-wise. So again, want you to be practicing these trades. Use your trade worksheet. Those are available for free in the show notes. You can go to the channel and you can find them in the show notes posted every day at chartingwealth.com. Of course, the best way to get all the stuff I'm talking about is to become a subscriber. Subscribe at chartingwealth.com. We'll send you all those show notes and the videos every single day. So that's where we are on the cues. Do keep an eye as the new week starts on things maybe bottoming out. So if you see that 4-hour chart starting to cross over going up, go ahead, take your profits if you haven't already, and enjoy the virtual profits that you made around $10 or $11. So again, isn't that beautiful? That's the beauty of the weekly vertical crossover, particularly in the fall-winter trading zone. What do we see on 20-year bonds? Up for the day, 0.10% on Friday. That added to the up total for the week. Of course, we see that we're still in a confirmed down move. We don't have a crossover yet. We'll let you know if you've subscribed to our texting service. If you're in the States, it's not offered worldwide. But regardless, if you're somewhere else in the world or you don't have a phone that gets text messages, you can always listen to Comprehensive Review and Forecast on the weekends. We'll tell you. But if you want that immediately, do go ahead and sign up for it. You'll see how to do it in the show notes. Doesn't cost you anything. Put in your cell number and we will text you. And again, we send out texts very, very rarely. At the most, you would get 4 a month, and that would be a fabulous month. Again, you'll get them only when they're necessary. We've got special things to offer you. So what do we see going on? Well, the price percent oscillator's heading up, hasn't crossed over. Derivative oscillator continuing to lose downward momentum. Maybe bonds have hit a bottom for a while. We'll see. We go from the weekly to the 2-day. What do we see there? Wow. That's 12 days of strong up moves. Weekly still in a confirmed down move. 2-day is in a confirmed up move. So if this continues, maybe over the course of the next week, you'll see 20-year bonds cross over on that weekly chart. We'll let you know at the end of next week. Don't forget, you only have a candle, a crossover when that chart ends. On the 2-day chart, the 2 days have to end. On the weekly chart, it has to make it through Friday. Sometimes it can fool you. We don't jump in early. We're trend followers. We're followers of established trends. Very important. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. On the 4-hour chart, on 20-year bonds, we see up movement in the morning, a bit of a peel back in the afternoon. And maybe things have topped out. Derivative oscillator looks like it's about to flip over going down. So maybe a pullback is coming. We'll just wait and see. Be patient till that weekly is moving in the same direction as the 2-day. We don't have a trade. So we leave bonds and we go to gold. What is gold doing? Gold, and on the weekly chart, we crossed over going up back on the 5th of October. Went up nicely for 3 weeks. Did very well for us. Then that trade ended. Things have been going down over the 3 prior weeks, ending the 16th, and then over the course of this last week, an up week. Derivative oscillator still losing upward momentum, but that price percent oscillator is heading up. And we go to the 2-day chart. What do we see there? It's just now crossing over. Ended the day on Friday, actually blew over red. Derivative oscillator still negative. Price percent oscillators just barely positive. So we went ahead and called it. Now, if it's a big down day for gold on Monday, you can sure expect that 2-day chart to pull back away and to go back down. But that's okay. If that happens, we'll deal with it then. We don't have a trade at this point, but we're setting ourselves potentially up for one. That 4-hour chart in gold is actually appears to be topping off. Could roll back over. If it does, that's fine. We'll just keep an eye on things, but we want to be primed and ready in case gold does cross over and then moves back up again and gives us a jumping in point. We'll be ready. if that happens. Remember, we're trend followers. Lots of good training at the channel for you, chartingwealth.com. You can also go to our YouTube channel, subscribe there if you would. Those metrics really help us. You appreciate what we do, by all means, buy the book, Charting Your Way to Wealth. We're now in our 7th edition, 7th. We're so proud of that and appreciate all of you who've helped us out and purchased our books. If you want to be a Patreon member, by all means, go sign up there. We have all sorts of special training for you, special monthly offerings, including a Q&A that we do for our entry-level Patreon members, intermediate-level members. Of course, you get a 15-minute, once-a-month training call where we call you and help you focus on the things you think are most important for your training. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.